Hey everybody, and welcome to session number 2 of Trade With Me. Today we have chosen February 17th of 2021. Um, so this will be interesting for us to go into. Last time we were a little bit closer to our current time frame, at least 1 year later. And as usual, guys, I did not look at um, the market activity, the action, because as much as this is an educational video, this is also for me to practice my own trading, and it really wouldn't do me much benefit for practicing if I already knew what was going to happen. Because, well, unfortunately, we can't trade in live time and already know what's going to happen. So I did go ahead and I got all my levels set for today, so we don't have to go through that in today's video. If you're not sure what I'm talking about and you want to get caught up, just review the first segment of the first episode in this trading series, and you'll kind of see what I go through and what my process is. So we're going to jump right into it today, guys, and we're going to kind of build our narrative. We're going to look at what I look at in the morning based off of my levels, based off of market activity and what's going on. And we're going to try and figure out what we think some of the potential events are going to be today. And we're also going to pick our upper and our lower targets. That actually just reminded me that I do need to do something real quick. So we've got our practice levels, and what we're going to do is we're going to delete the old practice levels major. We're going to make a new one, save as new drawing set. Perfect. Okay. What we're going to do for our other charting, since we only want the major levels, we're going to go ahead and clear out all these less, what's the word I'm looking for? All these levels that are a little bit more opaque. So there are minor levels. It's our PD levels, our T+2 levels. We don't need to be as concerned with those when we're looking at the macro scale. Oh, struggling on my technical executions today. All right, there we go. Awesome. Okay, so the first thing we're going to look at, let's go ahead and kind of look at what the long-term chart is giving us for information. Just want to kind of get an idea of where the market's at, what it's doing. So we're looking at 3 months here, 1 quarter, and it looks like, we're definitely in the height of fun times, bull times, as it were. As you can see, our 90-day value area is down here. We're trading well above it. One important thing that I definitely want to point out about our 90-day value area, so check this action out once we kind of broke into this area here. We can see that our 90-day value low has kind of been where support was built for a little bit there. And then when we started to make that break up higher, we tested, some value high right here. We had this rotation back down. And then as I've explained to you guys before, the point of control is almost always where a new beginning starts. And sure enough, we came back down. We had our point of control as support back here. We had the test here. And this is where we started our next leg up. So we're now in a new leg up in the market. That's good information. That's something that we want to take forward with us. So putting this behind, we're in a new leg up. So let's look at our midterm, kind of take a crack at what's going on here. So similar to what we were looking at with the 90-day, we are broken out. We're trading above, where our value has been established for a little bit. So we are in kind of like a test phase, trend phase. The market is seeking out an unfair high for which we can kind of enter into some consolidation. But now when we look at what's kind of going on a little bit more in the near term, so like 1, 2, 3, 4, 5, 6, 7 days from where this pop out happened, it looks like we have gotten a little bit of sideways action right through this area, and we made a test up that looks like on the 16th of February, the test actually ended up in a red day. So that actually tells me we gapped up on this day, and the gap up was not held. So there might be an unfair high hanging out here. That's something that we definitely want to keep an eye on and be aware of. So let's see what our more near term is doing now. All right, so sure enough, we got into the pop-up. We can definitely see that there was the sideways action going on here for a couple days. Looks like the value low held pretty strong. Yeah, look at that. I was right. So we had a gap up going from this be the 15th into the 16th. The gap could not hold. So this tells us right here, this is absolutely an unfair high. Once we established that unfair high, it looks like we did come back down. We even came down below where the rally kind of ended on that Friday. Okay. Had some mostly sideways action after we rejected the gap, tried to really test and fill out this area here. So let's see what's going on in our overnight session. Looks like we were a little bit wild going into the close of the market, but it looks like since the market opened, and by open I mean our pre-market, it looks like we had a really aggressive drop all the way down to where the point of control is currently. Okay, so these are going to be some really good levels for us to pay attention to going into today. We're going to want to pay very close attention to our near-term POC and whether or not it contains the price action to one side or the other. So kind of looking at what we've got here on our volume profile in the short term, it looks like we made that gap up. We had this thin area. There wasn't any interest in doing business up here, so we had that kind of fall down. They tested out levels here to see if this was fair. Market determined, or at least the pre-market has determined, that these levels were not fair. And sure enough, we're coming back down to test out where we've had the most volume traded for the last 5 days. All right, cool. Practice levels. And setting up, making sure our levels on our chart to the right are all correct and accurate. And just so you guys can see what I'm seeing, I will show you that chart before we get going real quick. So let's try and figure out where our potential upper and lower targets should be today. Well, if we end up breaching this point of control and our overnight low, it definitely makes sense that we would test out the value low again. That seems to hold some pretty good water there. So we're going to go ahead and we're going to assign our lower target to the value low. Now, as far as upper targets go, if the point of control does hold and we start moving up, I think our value high is a very reasonable target to start with for where we could potentially see upward movement to. Obviously, if we end up breaking those levels, we'll readjust afterwards because we want to have some pretty good targets moving forward. All right. Let's go to our pre-market. So this is, you can kind of see it a little bit more zoomed in what I was talking about. So as the market opened, it seems like everybody was trying to kind of futz around here. Not much volume kind of going on. And then as we're getting closer and closer, just nice little crater right down to our 390.58 level. I say crater, that's a $2 move. That really isn't anything. Of course, when we take into consideration our current market action, yeah, that does actually seem kind of wild, doesn't it? All right, so as promised, guys, this is what I'm going to be looking at on the right side, my right screen. So unfortunately, you guys won't be able to see this, but if I see something cool that I want to point out while we're going through this exercise, I'll definitely move the chart over so you can see it too. So we've got our 5-minute chart to kind of help us figure out when we've got some brackets forming. We've got our 30-minute candles, which can kind of show us where the supply and resistance zones are forming. We have our extended monkey bars, which is going to help us see much better when we've got pore structure kind of building out throughout the day. And then, of course, we've got our nice 5-day volume profile chart over here with the extended monkey bars. So we can see as price moves, if there's any levels that we may have missed from before. And that can kind of help us identify some targets or where we may run into some resistance or support as we're moving in one direction or the other. All right. Without further ado, let's go ahead and hit play on this bad boy. And like last time, we are going to be playing in 3 times sped up. So things are going to be moving a little bit fast. So what that means is we're going to be paper trading. What we're going to do is we're going to mark down the times at which we decide we're going to take a position, and we're going to mark down the times at which we decide to get out of said position. And then at the end of our quote-unquote trading day, we'll look at the contracts based on what we would have been playing to kind of figure out what we may have made or what we may have lost playing in the markets today. Woohoo. All right. And here we go. We're off. All right. So immediately out of the gate, we're going to pay close attention to how the opening price action reacts to our near-term point of control. Again, points of control tend to be where we do find new beginnings, but because it's the near term and in what's going on, we may find that the market could try and balance on this particular point. But what we're more interested in is we want to see if the price action starts to get contained on one side of it or the other. So for example, if it becomes a resistance or if it becomes a support, that's going to be very significant to us for our trading today. If we end up balancing on it, that could also help us out too if it ends up looking like it's going to be a balancing day. All right, so right here, we had a low try to form, broke through our overnight low, and got rejected. We've got a pretty long wick on this. Now it's trying to determine our opening level, or it's testing our opening level. Wait, no, I'm sorry. That is our opening candle. Top to bottom, nice little thin body, wick on both sides. So it looks like we haven't really picked a direction one way or the other. We're probably not going to be getting into a trade for the first 15 minutes easily, just because things can be a little bit crazy. So right now, price action seems like it's kind of being contained between that overnight low and the near-term POC. Based on our market profile, it does seem like we are going to be looking for some lower activity. So we can move our chart along with it. We're going to make sure, oh, there, haha, look at that, right off of our S2 line. So far, price action seems to be being contained below our point of control. Now, of course, we're only 6 minutes into the open, but right now it seems like we're going to be kind of looking for a bearish narrative out of the gate. We're below our 200, we're below VWAP. We've got a pretty good spread between our moving averages on our 48 and our 13. We're starting to run away from that point of control. Sellers are definitely in control right now. Right, we're coming up on our T+2 low. If price action starts to break that, we could be looking at potential margin territory for folks who are caught long, especially since we hit that unfair high not too long ago. So that's something that we want to be paying attention to too. Considering how bullish the market has been from what our longer analysis told us, there's a good chance that there's quite a few longs that are trapped. So being able to get below that low could help us snowball a little bit. Oh, something else that I probably should have pointed out. We opened up on a gap down. Here's our previous day low. Here's where we opened up. So we actually are on a true gap right now. which means there's pretty good chance that the market may try to fill this gap. So this is going to be really telling right here. If we reject off of this near-term POC, I am absolutely going to be taking a short position. If we don't, we may try and play this long up towards closing the gap. Geez, price action moves just so freaking quick. All right. Let's say we took a short position there, because I did say I was going to do that before this candle started moving like crazy. Just hit the lows. We're going to shave a point there. What's the time on that candle? So our stop out point is going to be the point of control. You know, we don't want to lose anything here. We'll get into that T+2 low. All right, we're going to go ahead and sell a second piece into this volatility, just because this is, you know, a really nice opening move, playing the low off of the near-term POC. So our stop point, we're going to use this 13 moving average as our stop point. If we get a candle that moves above that, that's where we'll just exit the rest of the position. Otherwise, we're going to let this one run for a little bit, because we're coming up on that near-term value low, which, if we remember correctly, we moved our lower target to that. Ooh, getting some pushback. We might get popped out of our position. I want to say that's 937. All right. So we want to pay attention here now, because we might end up closing that the last of the position if we get a candle that closes inside this. Ooh, it's getting close. All right, and that would have stopped us out. So we wouldn't have gotten a ton of profit on there, but remember, we entered just below that near-term POC. What candle is that? 941. That POC is holding. Whoop, and it's not. So now the potential for that gap play starts to become a little bit more realistic. Though I don't like to play on the first break through our moving averages. I like to wait for it to break, come back, and then start to see if we're holding a good level to enter. So we're going to go ahead and take a long position. Candle is that. And we will be out if we close below the overnight low. I'm going to give this one a little bit more room to breathe, since we're so close to that VWAP and the POC. We're going to take a piece in the volatility. All right, I need to pause this for just a second so I can kind of get caught up on some of my notes. Whew, okay. Whew. I don't normally... All right, why are you still going? Did I not hit pause? I'm pretty sure I hit pause, right? I don't want to be like hindsight analyzing this. Oh my God. All right. Well, let's say we took our second piece when we touched the 200. And what we'll do is we'll play to touching back, you know, similar to what we did here. If we cross back below that 13, we'll close the long side. All right, it looks like it paused. Okay, I can finally get caught up on my notes now. All right, so we entered off the rejection of the POC. That was our 935 candle. So that was our enter. We took one piece off the lows, our 936 candle. 1/3. We took our second third at the 937, and then we let it close us out at our stop point on our 941 candle. Okay, so that was our first short position there. There we go. Now we took the long position when we broke back over, and we'll say we entered on this nice little doji right here, 944. And we took our first piece up at the 200. So that's going to be our 950. And we've got our stop triggered if we cross back below the 13. Okay. Whew, there we go. And we're back to it. And unfortunately, it's still a little too early in the day, so we don't know if the day is going to try and balance yet. All right, we closed the gap, so that's actually where we would have ended up closing our second piece. So what candle is that? 951. Not every day moves this quickly. Like these plays just they show themselves very quickly. So I do want to digress for those of you who are watching that my trading days don't always go like that. Quite frankly, most of the time I haven't made my first trade until 10 a.m. That's pretty normal, pretty standard. But I'm not gonna not trade the morning rush if something presents itself. Like when you've got something like, a point of control that's so highly contested right there, you've got some pretty high odds for trades that you can make. All right, it looks like it is starting to struggle with the previous day low. So we're going to adjust our stop. We're going to close if we close below the 200 instead of waiting for it to close below the 13. Still battling it out there. Yeah, that gap is holding pretty solid. I don't feel super confident that we're going to get more out of this long. We could close it now and just take the extra profit, but we play this way, this style, to let the market execute us out of those positions because the market can do whatever it wants. There's no rules that it has to follow. So even if we see something where it's like, oh, it's starting to struggle at that level, maybe it is going to come back down. But of course, the other thing to consider, we're consolidating right at that peak. And when you start to consolidate on levels, that starts to build a pretty strong argument for eventually breaking it. Oh, here we go. Looks like we're going to get executed out. Could be 958. Let's see. Where's it going to close? Yeah, it already broke through the 13. We would have been out on that. All right. So now we are position neutral. So what's going on now? Well, we've got our first two quick plays off, and it looks like now that it's filled the gap, it is starting to come back down. So we want to ask ourselves, do we think the day is going to start trying to balance? We only have one period so far. We're starting period B right now. So we'll have a better idea based on what we get in period B, whether or not we can play this like a balance day or if we're going to have to start playing this like a trend day. But we can at least make some trend lines to be paying attention to. So this is good. Everything moving so fast kind of forces me to think very quickly too. I do like that. All right, we're getting some testing of this point. This would be our buying climax, and then this would kind of be where our first reaction went to. So now what we're waiting to watch for in this consolidation zone is when we end up getting our secondary test. So in theory, whichever direction it tests against, we'll then kind of be looking for a false break on that side to where our next potential play could be. Now we are starting to see some weakness with the EMA. We're getting candles that are more and more starting to aggressively push inside of it. We haven't gotten a touch off that 48 yet though, and that's typically what I wait for when when I decide that I'm going to use EMAs as entry points. Whoa, well, that's some fun little market maker info that just happened there. All right, so now that we are breaking here, what I would want to look for would be a subsequent push up and to try and enter a false break either of our trend line here or of our top line here and play to the short side. But so far, we might not get that pop back. This reaction here might have been what we were looking for. But that's fine, you know, you're not going to see all the plays, and when they pass you by, you just let them go. You don't try and chase them. So here's our VWAP right here. Let's see if we get a little bit of support there and another upward auction that we can play short off of. So here's something interesting to note where we came down to VWAP and seemed like we found a little bit of support. This is right where the first buying push got exhausted. So this buying frenzy we're seeing, that very well could be a continuation of this. So now we've got to make a judgment call. Was this the false break that just happened to happen super quickly and it's actually trying to make a push to the upside? Or are we now going to get our false break to the upside where we can then start looking for our play to the short side? So we'll just kind of watch this and see. If we end up breaking the high here, what we're going to watch and wait for is we want to see it come back down and use this line as support before we start trying to get into a long. I don't play breakouts as they happen. I wait for them to be tested and proven. That's just a personal preference in my particular strategy and how I play the markets. Because I feel that I get faked out, by breakouts more times than I get lucky and I get a breakout as it's actually happening. So I guess we can kind of mark this off as like a sign of weakness. Could also potentially be our reaction. If we're looking at the 5-minute chart, that is kind of where it would be. So why don't we go ahead and we'll move that down to there. That makes more sense. You got to remember, you can't just strictly use one time frame for everything because you're not going to get the whole context of what's going on. All right, so we are getting some pretty good channeling here. If I was a scalper, this would be the time at which I would start playing the tops to the bottoms, but I am not a scalper anymore. I got burned one too many times trying to play that way, so I tend to be a little bit more methodical, a little bit more relaxed in my entries and my exits. So the good news is we've got a pretty solid channel forming that we're just going to kind of look for an actual break of. One thing to be conscious of is our previous day low is currently acting as our resistance, and it's just our VWAP that's kind of being our support. So this looks like this could be the false break we're looking for. If we were feeling super brave, we could try and take a long position somewhere around here, but I feel like we would have to use the point of control as our stop out point. So we're going to wait to see if we get an ignition candle on the green side, and then maybe we'll try and play some momentum up and through to the other side. So the only unfortunate thing is when you do get the false break, the move to the other side tends to happen very quickly. So you got to kind of be paying very close attention. Here we go. Got a little bit of a peak of volume. Let's see if it dies off a little bit here. Pushing back through, right off of VWAP. All right, we're going to go ahead and enter long. And we're going to use the low as our stop out. All right, if this was the false break, we do want to see this move up a lot quicker. Okay, we're getting some of that movement. We're going to shave a piece at that 200. Let's see, we entered on 1018. And we shaved. Oh boy, I don't like that rejection. We're just going to close the position. I was actually looking down at my notes. So we're going to close on that candle. Yeah, that was that pushback off there. So that's good. We actually would have been able to close that position and maybe salvage like 2 or 3 cents on the rest of the move. Woo, baby. Yeah, wow. And that's also why you want to be paying attention when you're doing stuff like that, because something like that can happen where we thought we had the false break. We ran back to the 200, we shaved our first piece, but then the fact that it immediately blasted back down from there on a nice volume peak, that was a sign. You get out on that candle. You don't wait to see if, oh, maybe it'll recover. No, 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 no. That is a very aggressive push against the play that you're making. You exit. You get out of that position. So that was our 1020. I'm going to make a note of that because we did take a good piece. 1/3, 200, 2/3, stopped out. All right, and look, we are now back down below our point of control. Didn't even get support at it. That's not a good sign. Well, I mean, say good sign. It really isn't good or bad, let me rephrase that. That's not a good sign for bulls. But we try not to trade or play as one or the other. We try to take advantage of the opportunities that the market presents us. We're going to let this consolidation play out a little bit more before we take our next position, just because that very violent reaction right here that just completely decimated what looked like a channel was forming, that gives us the information that things are a little bit more wild, wild west right now. It's one of those situations when what should happen doesn't happen. That's where we got to step back a minute, and we probably want to sit on our hands so we can really kind of take in stride what information the market is telling us. All right, guys, we are coming up on 10:30, which is going to start us into our C period block. We've actually made some pretty impressive range on today, considering the trading ranges of our previous days. So real quick, talking about the Ema Crossover Strategy. So notice how I said we didn't want to get short here as it was pushing through, but look at this. So if we had been playing our Ema Crossover Strategy instead of looking for a channel to form to play the false break, we actually would have been in a much better position, because then we would have known, or we would have played short after we hit that next peak, because we got the push through off the 48, the push back to a new peak, which is then where we would take the position short for the actual crossover event of the EMA. We could wait for the crossover event to happen, but I prefer to be in a more lucrative position, but that's just me. I really do love the 13 and the 48 EMAs for the SPY trading. I don't know why, but there's so many cool ways in which it syncs up, and I feel like it helps give me a pretty good tone on how everything's behaving. And of course, when those clouds start to get like really narrow, then I know just stay out. All right. So it looks like we are rejecting the POC, and we are going to come back down and look at some of those lows. So today is starting to look like maybe it is a balancing day, which tells us that we're going to be looking for a new peak now. I mean, if we end up getting back over the POC, we're going to look for a peak to short. Otherwise, we're going to be looking for a low to short, to go long on. So let's get rid of these, because they clearly did not help us today. Let's see where our peaks are kind of forming up. Oh man, look at that. I mean, we wouldn't have known that was a false break, but yeah, So here's our cross through event. We got the peak that was a false break off of a nice trend line. But again, we wouldn't have known that was a false break because we didn't get the marker point until this candle here. Which I guess in theory, this also would have been a good short play. And that was the one that we were long on that we got out of as we saw everything kind of hit that. So we're going to see what price action does here. And we may take a short off of the 200 or somewhere near here because then we know we can get out if everything changes. Or maybe it's not even going to give us a chance. These wicks are actually getting pretty aggressive for my taste. So this seems to be where we're developing our point of control for today. So it looks like buyers are trying to give it one more go to see if they can generate some activity. But that's also why I said, if we are in fact balancing, which it does look like we are, that's why we're looking for a peak to short. Unfortunately, with balance days, our plays are to the point of control. So we want to look for the extremes in which, an auction kind of runs out of steam in its movement, and we want to try and play it back towards where the highest volume is developing on the day. But right now, since we're kind of hanging out down here, I don't really see any plays that I like. I'm getting closer and closer to the end of this period. This is what, A, B, C. We are in C period. We start in D period after that. Oh, we are getting a nice wedge. But man, look at this. This is why, doing your homework for what you're trading is so important. I mean, look at this. This is just absolutely finding its balance right on that near-term point of control. This is a battleground. But it makes sense because, this is the point at which the most buyers and the most sellers have agreed on a price. All right, so something looks like it's starting to fundamentally shift. This looks like it was an exhaustion peak. So unfortunately, I caught that a little bit slow, but this would have been a really good candle to short. We're not going to say that we took that just because I did. I saw that, pretty much well after the fact that it happened. But this spike in volume and then no follow through, that right there, that's what we call an exhaustion or an exhausted auction. So there was this one final last push, which probably means that a bunch of people got out of their positions because they didn't trust the direction anymore, and then nothing was there to kind of push further to take more control. So then that's why we had the abrupt rotation back down, and now we're breaking through where we've got the point of control. So it looks like we are in fact going to go ahead and find a new low. Or I could be completely wrong, and somehow we're going to make a giant green candle on a very small amount of volume. But that's okay. It's okay to be wrong. We're not going to be, we're not always going to know what's going on. Look at that. That wedge is just playing out more and more. Okay, so that wasn't the break. I think the narrative that we're looking for now is we're just going to wait for one of these sides to crumble. But what we're going to be patient for is just in case it's a false break. Because if we do get a false break of one of these levels, then that'll be a great play to the opposite direction. But otherwise, we could be exploring a new high or a new low. All right, break of our trend line. Ooh, and we've got some follow-through volume on that. Break of the 200. Impressive. Some building, increasing volume. Getting that little pullback. We'll see what the volume does there. Looks like it's matching it tit for tat. Well, if we're still playing to the balancing theory, we will be looking for a peak to short. So I guess maybe we don't need to get rid of that line that we had drawn in before. That looks like it's going to continue for a hot second. All right, so that's on that. So we're going to go ahead and draw a line here. There we go. Make a reasonable place for us to find support. I'm getting close to that demand zone on our 30-minute candles. Or I guess supply zone. So I always reverse those two. Look at that. Nice touch off the 200, the 13. A little bit more of a leg up to our value high. See if we can get a push past that value high. We are still looking for a short opportunity, but we're going to be cautious about it. You know, we're already doing well today. I mean, we're up as far as our first positions are concerned. So we don't need to take any trades here unless we're sure. So the risk profile we'd have to take on, you know, we'd have to have a stop somewhere up here to really let a potential short breathe. Now, let's see, let's do this real quick, see if we get anything playable. All right, we hit our 11 a.m. point, so we are now in period A, B, C, D. Period D. Still not seeing anything that's giving me strong signals one way or one way or the other. It looks like it's a shame we didn't try shorting that value high. But that's okay. We didn't like the risk to reward, so we didn't risk it. We did not risk it. Man, we've got a real thick balance going on. It's just building out more and more and more. Yeah, look at that. Yep, the value high, that was the short, playing it back to the point of control. So it's still telling us that it's balancing. So we'll see if this low breaks through or if it gives us a point to potentially play off of. I mean, I wouldn't want to grab a long here because this is kind of technically the middle. But it is important to note that we did have this big push below point of control, couldn't contain it. We had a small push below point of control, couldn't contain it. So now this will be a real good test of that point of control. This could be our false break on the point of control that we're looking for. So if we start moving back up through, we'll take a long position. 1107. We're going to go ahead and take a little bit of our risk off right at that touch. So that was to our VWAP. And we're going to use the NT POC as our kind of stop out. We definitely don't want to use this low as our stop out. That would just be too much at this point, because if it isn't going to push the rest of the way through, we don't need to wait to see if we're going to get a new low. So this will be our point right here. And that's pretty close, almost. And we're out. 1111. So we probably would have actually lost a little bit on this play. And we'll figure out when we kind of go back and do our mathing. But I don't think taking a single piece off here would have covered losing the difference between where this near-term POC is and where we let that stop us out. All right, 15 more minutes to go, guys. Ooh, we've got a poor low forming on some of our intra-profile activity. So this is the point where we'd actually expect, or we'd think we'd see a little bit of a push in the opposite direction. Or maybe, oh, you know what? Now that I think about it, that's what this was. I should have been paying attention to that. So just kind of like a little bit of an explanation. I wasn't paying close enough attention to my charts on the right side, but this touch right here created a poor low with our previous activity. So what we had is we had some covering. That's what shot us up. So that was not a false break of our near-term point of control. That was a poor low forming. And sure enough, after the poor low resolved itself back to our VWAP, now we're exploring that new low. Oh man, that is so unfortunate. But you know, that's a good thing to pay attention to for next time. That's a good lesson. We were definitely on the wrong side of that trade because we didn't zoom out. You know, I didn't check my market profile as we were getting close to hitting that 11 o'clock time period, right? Because we ended up opening that at 11:07. So I should have been paying attention where we were heading to in regards from our period D or period C to period D. Womp womp. Oh well. Lesson learned. Let's see if I can not repeat that in the future. So we have now resolved that poor low, which means this could be a structurally sound low that we're forming now. We want to see if this takes any good extremes, though, especially since we see this building volume as we're moving down. This may not be a long opportunity. We don't like that building volume in the movement. If we were going to play this long, what we'd want to see is we'd want to see volume become exhausted at the end of the movement. Or we'd want to see a pretty violent reaction in the opposite direction, which moves back up to at least where it just did. Looks like we were a little too slow. But that would have been a good position to play long back to the point of control. And if you had been quick enough, you would have been able to situate yourself in, set your limit sell there, and this candle would have executed you out. So even if this flips around, you would have already taken your profits. Get rid of these. They're kind of starting to get kind of convoluted. All right. I think that's where we're going to call it today, guys. We got 1, 2, 3, 4 plays in, 3 good ones, one misread play that we still got a piece of, so it wasn't a total wash. But like I said, we're gonna do a little bit of math now and try and figure out, what we made today. So let's see, right out of the open for where we were playing first, let's see, what price were we at? 390.51. I need a window. What window do I need? I need my AT window. That's what I need. Okay, so how am I going to do this? I wonder if I can send those to him. We're going to try something real quick. All right, so we'll assume we were right around 390.50. We'd probably be playing with something that's around $1.50. Send that to brown. Send that to lilac. And let's see if that works the way I hope it works. 443, 445. No. Okay. Well, now that we've got this up, we're going to do it this way. Now that should work. Okay, awesome. All right, so here's the first positions that we were looking at this morning. So let's go to where we entered. We entered at 9:35. So let's zoom that in a little bit. Make it easier to read. 9:35. We entered. Probably wouldn't have gotten a perfect fill on that. No, actually, you know what? We probably would have been pretty gosh darn close to a perfect fill because we were looking at the near-term POC, and that was our entry point. But we won't give ourselves the wick, which is an extra 5 cents. So we'll give ourselves the bottom of the candle at 131. Again, it makes sense to try and be really honest with yourself about where you could have or would have gotten filled. And I mean, if you're practicing like this, guys, you should have a pretty good idea of how quickly you enter and exit positions. And remember, you're not doing yourself a service if you, if you cheat a little bit. So 936, we would have taken that off of the volatility. 937. $941. We're getting that as it was coming down. 152. All right, so that was our first short for the day. Then our long position, it was at 944. Let's see. I just want to look at one of my other charts so I can kind of remember what was going on at 9:44. Whoa. I know you guys can't see what I'm doing right now, but don't worry. Oh, that's when we cross back over our near-term point of control. So 390. So we would have been looking at the same ones. Okay, good. That's all I wanted to do is just make sure I'm looking at the right options. So we entered at 9:44. Oh, sweet. Well, that's an easy one to enter on. And then 950. $9.51. And that one we did peak, so that was pretty cool. And then 958 is where we got stopped out. That's a doji, so 2.6. Can't really fudge around with that one. Let's see. Oh, then we had that other play that got stopped out long. That was at 10:18. What was going on at 10:18? 15. Yeah, you know what? We probably would have been playing the same contracts. They're pretty close. 10:18. Oh, wow. Look at that. Nice entry candle to get in on. I mean, I knew the entry was great, but unfortunately, that was a play that turned against us pretty quickly. Because we were out, what, 219, 220? Yeah, we were out on 220 hard. All right, cool. So we still made a nice little chunk on that from 219 to 2.32 because we definitely would have got filled somewhere near the bottom of that candle. That one happened quick. But I think that's the one that we saw. Oh, wait, no. That's the one that we were playing to and we saw. So actually, you know, we're going to be a little bit more generous with that one because that was the one we played to that got pushed back. Oh, well, no, then you know what? It got pushed back real quick. We probably wouldn't have been able to fill ourselves that quickly. So we'll still just give ourselves the bottom of the candle. That's fair. Then 11:07. So we took our next play. We were out real quick on that one. Let's see, 11:07. Give ourselves the 1.95. And then 11:08, we did take that piece off of the touch. But then we got stopped out hard. 10, 11. Ooh, yeah, we took a little bit of a beating on that one. So that's 2. All right, let's do some math. Busting out our handy dandy calculator. All right, well, first position absolutely cleaned up. We got 1.33 on our first short. So, you know, leverage that accordingly to however many contracts you're playing. If you're slinging singles, or in our case, 3, since you're playing in thirds, that would be $133. And then, of course, for every increment you leverage up beyond that, just add a little 0. All right, so for our second long, Nice. Oh, cleaned up on that second one too. $1.82 on our second play. All right, third play, definitely not as good. Wait, hold on. 1/3 at the 200. Did I not do that one correctly? 1020? Hold on. We gotta revisit that one real quick. I may have done something incorrect. All right, so we entered on the 1018. We took our first piece at the 200. Okay, so we capped. That's what I got wrong. We capped the volatility, so we did get the high, but then we had the rest of our position closed out on that. Okay, there we go. All right, we're good now. Okay. So we still did pretty good on that one. We got 59 cents on that. That ain't nothing to laugh at. All right, let's see how much we hurt ourselves on that last position we took, though. All right, we got that. And then... Knock it off. Sorry about that, everybody. That is my trading assistant, Mr. Odysseus. And it sounds like his mother just got home, so he's just kind of excited about that. All right, so we actually lost 11 cents on our last position. Okay, so let's total everything up and figure out what we made today. We made 1.33 plus 1.82 plus 0.59 minus 0.11. Ladies and gentlemen, we took $3.63 out of the market today for our training exercise. That is a pretty gosh darn good day. I aim to take about $2 to $2.50 out of the market. That's kind of like the median goal. So yeah, today was a nice haul. Fantastic. All right. Nice job, everybody. Nice job. Hope you guys enjoyed hanging out and trading along with me. If you want to do these live, remember you can join our Discord. I do these live on Sunday, and you can ask questions at the end, and it's a good fun time. But other than that, guys, I'm going to be getting out of here for today. So please like and subscribe, and go ahead and watch some of our other videos. Ta-ta for now. There it is.